For more on the market action and what we could expect in 2025, we have Brian Jacobsen, Annex Wealth Management Chief Economist and Strategist. Brian, good to see you here. I think markets, to me, they just feel too happy. I appreciate the positivity, but it can't continue. As we look into next year, do you see any dislocations on the horizon for markets?
Yeah, thank you for having me. So here at Annex, the way our investment committee is looking at it is, you can enjoy the Santa Claus rally because I think that's typically what we have. I think it's about 80% of the time going back to 1926. The last 5 trading days and first 2 trading days of the new year are positive. And so that's a great thing, but you're right. The good feelings eventually do likely need to come to an end, and reality ends up slapping us in the face sometimes, and sometimes it's kind of hard. And I think that one of the big risks as we go into 2025 is really thinking about, FDR, his famous speech about we have nothing to fear but fear itself. And so if that sentiment changes, if all the things that have propelled the market higher since the election, prospects of deregulation, you have the extension of the Tax Cuts and Jobs Act, if those things maybe look like they're not a slam dunk or that they might be pushed out to a later date, that could be the dislocation opportunity that we're looking for. Because with that type of reality check, that could create a market correction, which then we would view as being quite buyable.
Brian, we were talking earlier about a note from BTIG that's rattling around in the markets here this morning, talking about a 6,100 level. Perhaps the S&P 500 can make a new all-time high into year-end, but also notes that January is likely to see some downside volatility. What would that volatility, from your perspective in the setup going into January, what could that potentially look like?
Yeah, that's a great question. And I think that a lot of it really does hinge on what happens around Inauguration Day. So if President Trump, does he come out swinging with tariffs? First day, what are the executive actions that he takes? Those are the things that it can really maybe shake the snow globe of the markets right here. And it's possible that it could be, a big rotation. In 2018 to 19, he started with the threat of tariffs and then implemented them after a period of time. But if now he starts with tariffs and then dangles the carrot of removing those, and if concessions are made, that's the type of thing that we would think could actually make emerging markets a better buying opportunity. There is a real cloud overhanging emerging markets with China's slow growth, but they are beginning to offer some stimulus. And if we end up having tariffs that aren't maybe as bad as feared, perhaps that creates a decent buying opportunity there for people who have been long suffering through an overallocation or an overweight to emerging markets.
Brian, it sure seems like we have set the stage for some form of first quarter correction in markets. Tariff threats, unsure policy from the incoming president and his administration. Do you fear that at all?
Yeah, I agree with that perspective. I think that we are likely going to see something in the first quarter that is perhaps a little bit more intense than what we experienced just last week, where there was the drama around the Fed's rate cuts, cutting back on the pace of rate cuts, combined with the recognition that there's still gridlock in Congress. Even though we are going to have a red wave, or have had a red wave, that's not a blank check for the Republican Party or the White House to just plow through whatever they want. And so combination of those, I think, could come to a head in the first quarter. And it could be something that is, as some people would say, rather nasty, brutish, but thankfully short.